Welcome to Trading Lounge and the US indices for the 21st of January 2019, and starting with the Elliott wave count as wave 4 from wave 3 here down to wave 4 here or to wave 4 over here. This wave 4 here can be completed at this point here, and we will be able to see the markets just straight continue to move up in this way, and we'll look at that today as well. The other count here is because we've got 3 waves down here. It means that it's corrective, and it also means that it may just be the beginning of a larger correction that can move sideways. So we could look at this in terms of an A wave down here, a B wave here, C wave here, is a triangle pattern here, and a D wave here, and an E wave here. So pretty much a, the old triangle pattern. Oops, daisy. So something like this here. So with an A wave here, B wave here, C wave here, D, E, and 4, and moving up that way. And then we can just bring this, move this wave 4 here over there. Move that here, and I'll probably need to come up 1 degree, but that's okay. But that pattern is possible to play out here. Okay, so let's just delete that. We don't need to look at that at the moment. The other point for all of this is that because we've got 3 waves to the downside here, let's just clean these up here a little bit. So because we've got 3 waves down through here, that means that we can have a flat correction. So that means that we can have 3 down here. That means we would need to see 3 waves up. So an A, a B, and a C wave here for a flat, and then 5 waves down here for this. And a flat pretty much means a flat here, and coming up higher here past the 61.8% mark here. So that's also possible as well here, an A and a B and a C wave here for wave 4, 1 larger degree though. We could put that here as an ABC here, that kind of thing here with wave 4 here. So that's also possible here as well. But this is more likely than, this pattern here is more likely than the triangle pattern that we put out just a moment ago. The other point with all of this as well is that the move from the top here down to the bottom here, the 61.8% comes in at 2700 over here. Let's just clean these up here. So this is where we're likely to see the resistance here. And not only is that the only sort of reason to see resistance here as well, it's just the fact that this consolidation through this block here, if we just look at this here, this is the resistance coming to the upside. So we're hitting that there at the moment, and we can see that in stocks as well. So if we look at Citigroup here, big bank, coming up to, we've got major trading level here is 50, and then the next level up here of the same degree is 80, and the halfway mark for that is 65, and it's a medium level, and we can see that this move up here is going to run into that particular number. In reflection from that, we've got that consolidation and support here, and yeah, so that's going to create resistance there. We've also got Goldman Sachs here. That's also coming up into 200. Not a lot of resistance here, but 200 is a large number. So if there's any weakness in the markets anywhere, then we'll be looking at this consolidating around this level here. But once again, with all these markets, are just those banks, we've got A and a B and a C down here for those. So we're seeing a strong impulse wave moving up through here. So that's something that we'll also talk about too with this. But in a nutshell, this area here is the resistance here, and also the 61.8% there. So the other point is then counting the wave structure to the upside here. So at this stage here, the move up through here doesn't count as a corrective wave to the upside. So it doesn't count as three waves to the upside as an A and a B and a C to the 61.8%. It's more likely we can see that we've got 1 and 2 here and 3 here and 4 here, and then coming in for 5 into the 2700 area. If it's going to trade above that, then look to the 2720 at that point. Okay, so we'll look at these 5 waves moving up here in a moment, but also too that this move here could also be counted in a bigger impulse wave here. So like we looked at Citigroup here for a moment, we can look at this as wave 1 and 2 here, a nice strong third wave here, and then a fourth and a fifth. So a much sort of bigger picture to the upside here that will take us higher. So let's just go in and have a look at this on the hourly chart first. This is basically where we've been working these 5 waves to the upside here. So from the current low here, we have wave 1 and 2 here, and then wave 3 here and wave 4 here, and then looking for wave 5 here. So I've adjusted that wave 4. We had wave 4 here, but I've put it over here because we've got an impulse wave here. So with this here, we would look at this then as 1 and 2 here, and 3 here and 4 here, and then moving up into wave 5 at 2700 area here, which is a 61.8%, and also the next level here is 2720. So in that space there that we can be looking for that. The only thing that I don't particularly like about this particular structure here is that if we look at the length of wave 1 here, just roughly down into this space here, yep, and then we copy that, and then we put that on the low of wave 2 there, close. We can see that wave 3 is shorter here. So that's the reason I don't particularly like this count, but that's okay. If that's going to be the case, then what we need to look at the next level then is we need to look at, it's okay to have wave 3 shorter than wave 1 because wave 1 can be leading higher, but it means that wave 3 can't be the shortest. So that means that wave 5 here needs to be shorter than wave 3. So if we roughly take that there, take that distance to this distance here, roughly speaking, just moving through quickly here. So that means if we put this onto this low here roughly, that will take us up to the 2720 area there. So we don't want to see this market move through the 2720 area. Okay, we need to see it stop in its tracks at the 27 here. Then that way wave 5 will be shorter than wave 3. So with that in mind, if we know that we see that push up higher through here, through the 2720, then we know that, well, wave 3 can't be the shortest wave structure, so then we need to reassess what we're doing, and we need to look at, I'll just go to the 15-minute chart here for a moment. Let me get some more data in here and squash this up so we can look at this a little bit. Okay, so okay, that's enough, I think. So even that we're lower down here, we can look at this as wave 1 here and wave 2 here. So instead of looking at this as wave 3 here, let's look at it as wave 1 to the upside here for this of the next degree smaller. So we've got this degree of wave 1 and 2, and then this degree of wave 1 and 2. So if we move through, let me just bring this in here, if we move through that, roughly speaking, 2720 area here, if we move through that, I'll just highlight that. If we move through this area through here, and it'll take a little bit of time because, of course, 2700 is going to, it's just a large number itself. It's the 61.8% mark. And also in terms of the trading levels, the 72 number here also plays a strong part in the process of a market moving higher. So there will be some sort of consolidation in this space here, but if we start seeing these moves back down as being corrective, then we know what to look for then, don't we? So this is the contingency wave structure. So if we see the reaction from the 2700 or the 2720s coming back down as being corrective, well, then we know that we're going to be pushing up to the 28. We will end up having a correction here as well, and then moving up here even higher at that point. So in the bigger picture, we would be looking for 5 waves, larger 5 waves from that low coming up, which will take us higher up. So if I go back to the daily chart here, so that will be taking us up to the 2800 at that point. So we'd be looking for 1 and 2 here, and 3 and 4 and 5 into this space here, and then we would have a correction coming back at this point, and because we've got 5 waves here, then we'll be pushing up here again. So a much bigger pattern to the upside here, which is certainly not you know, off the table because of you know, the US-China trade talks. We understand Trump can't negotiate very well, so you know, we'll see that and also negotiations as well. You know, it's the same thing. There's always that to and fro, so that can play out in, you know, it's all pretty rosy up here. It's not looking rosy. It's back on track. Definitely not happening. Oh, it's happening now. You know, and so on. So yeah. So there's a good case for with all this now. There's a good case for, if I can just move these out of the way here, the A, B, and C here. Well, we can put those in here now. So there's a good case for this to be in play here as such. Here now, so we can leave this as the primary count here now, and also too, you know, we've got to take on board what's happening in Europe as well, with its structure going moving up higher, and also, well, not so much Asia, because with Asia, it's still moving up into its 61.8% too, from India and Australia and so on and so on. So there's still a lot to get through just yet. So yeah, the main point being is the move down here is corrective. So we may end up with a bigger correction of wave 4 over here. Let me just remove that for the time being. That one actually. So we can still have this one playing out here. Just move these out of the way here. The other thing here too is that if we go over and have a look at the NASDAQ, but just before we do that, if we go and have a look at Amazon, we've just been using it as a bit of a guide stick to the upside. We've been looking at it. It's got the whole ABC thing for wave 4 as well, but counting 5 waves up through here, it's a little bit tricky to count this first leg here. I'm pretty much assuming that we've got wave 1 and 2 in here. Like I mentioned before, it's possible to have wave 1 here and 2 here. But I'll just stay with this for the time being. This is definitely a wave 4 here, so we knew that. So if you've been long here now on this little move up through here, it does look like, well, it could go higher from here as well. I need to have a look on the tick chart. I can see that this is wave 1 and 2 here, and this is probably 1 and 2 and 3 and 4 and 5 here for this. So that case there, we could look at the wave 4 of 1 lesser degree moving here, so down here, and one more move to the upside here for that to play out. Don't need that. So if this market moves back to the 1650 area here, then we know that the top is in place. But otherwise, just looking at this here, 1 and 2 here, and then the third wave is 1 and 2 and 3, triangle for 4 and up for 5 here. So yeah, a drop below this area through here, or 38.2% retracement level, would start considering a top in play. So yeah, they both come in 38.2, and the wave 4 1 lesser degrees in the same place there. So yeah, if you traded that up, hopefully you've taken profit on the Friday close anyway. So yeah, this can help take you know, the rest of the market's up. Let's have a look at the actual index here. So it's the same thing here again. It's possible to have this in locked in here now, because even at minimum here we've got 1 and 2 and 3 and 4 and 5 moving up into the supply zone here. The 60, this is lagging a little bit, so it's not the tech stocks that are leading us up. It's the it's the trade and the banks. So the 61.8% is higher here, so it's at 7,000. So that's where the resistance is here. But we can look at this being an impulse wave. Even if it was a corrective wave, we'd have to look at this as wave A and wave B here, and then 1 and 2 and 3 and 4 and 5 to get up here, which would take us much higher here. So the bear market's pretty much not there anymore. I mean, if we looked at the, I'll just finish this. I'll have a look at the bear market for the SP 500, just show you the last possible count for that. So I'll just go to the hourly chart here. So keeping it simple here. So wave 1 and wave 2 to here, and then wave 3 and 4 here, and here it looks like, if I can just go over this little count here, it looks like, I mean, how can I say this? I can put wave 1 and wave 2 here, right? 1 and 2, and then have 1 and 2 and 3 and 4 and 5 here for the third wave, fourth wave, and fifth wave up here. But it doesn't count like this on the cash market. So I'm basically using the cash market here to count. So with the cash market, it's clear that it's 1 and 2 and 3 and 4 and 5 for 1 and 2. Here on Friday, we're looking at taking part profit or profit at the 6,800, because 8's a profit-taking number, and we'll see this market dance across. But that said, from here, we look at this as 1 and 2 here. I don't think this is finished as a third wave here, and then a fourth, and then a fifth. So it can take us higher up into the 6-9 area through here. But just be a little bit careful there. We should see some sort of corrective pattern play out across the 6-8 here. I'm just going to go back to the S&P 500 for a moment, just to show you the last possible bear count that can play out here. Where did I have that here? Was it this one? No, this is just another. This is just another count. This is what the Asian markets can be doing here, and it's not you know, it's not out of reach here for the S&P. This would be an expanded flat correction with wave 3 here, an A wave here, an A and a B and a C wave here for the B wave, and then I can get 5 waves coming down through here. That's the thing. So I've just got to find out where I've done that. Maybe it was on this chart here. Right, yeah. So from the top here in the S&P, I mean, I have to look at all the counts, you know, and then just eliminate them one by one and bring in the bias and all that sort of stuff. So we can look at this. This is the high here on the S&P 500 here. On the S&P 1000, this was the high here. On the NASDAQ, this is the high here. So yeah, it's a little bit, you know, dodgy here on this particular instance here. It does look like this last little move up here is a truncated fifth wave of 1 and 2 and 3 and 4 and 5. But let's just humour me for a moment, or let's just humour this count rather. You know, we could look at it as wave 1 and 2 here, and then for the third wave down here, it would be 1 and 2 and 3 and 4 and 5. So that's all quite nice here, and because that's the 1, 2, 3, fourth wave here, and then the third wave, this fourth wave here. So this fourth wave has pulled back up to the fourth wave of 1 lesser degree. So even though it's higher than this 38.2% retracement levels, an A and a B and a C, it's still just pulled back up to the wave 4 of 1 lesser degree. And then we've got our 5 waves down here to make wave 1 here. So wave 2 here would be at the 61.8% mark. Not that wave 2 has to be at the 61.8% mark. It could be one of the other ratios that are higher here. It could pull back to the wave 4 of 1 lesser degree here again as well, but we would certainly need to see an A and a B and a C up here. So if we call this the A wave and the B wave here, I still don't have a C wave here. I still don't have 5 waves in this structure. It would still have to take me, it'd still have to be 1 and 2 here, all the way up for 3 here, 4 here, and 5 here, up into this space here. So so it's still possible to have that up into this space here. It's a long shot, but you know, it's good to just keep an eye on it. It's just a count. You know, it's doesn't matter. We're trading long. We're doing all the right things, but we're also exploring all the other possibilities that can play out here. That's our job. Yeah. So anyway, I just thought I'd share that. Alrighty. Thanks for tuning in, as always. Cheers.